Hi, I'm Keith McCullough. Welcome back. I'm here with Brian McGough, one of the senior partners and founders at the firm, to talk about one of our favorite growth stocks, Restoration Hardware. So this is a stock, by the way, that fits our macro profile really like a glove. I'm looking for U.S. domestic growth stocks that people don't particularly understand that would be a big benefit of a strong dollar as the U.S. economy improves. So, Brian, why do you love this growth stock?
Because it's one of the best in retail I could find right now. It has one of the most powerful growth algorithms out there. It's a company where over the course of a 5-year time period, I can take sales, or I think sales will go from 1.5 billion up to about 4.5 billion. And I think margins are going to go from about 6% up to about 13%,
wow,
which takes earnings up from $1.50 to $8 a share. And this is a company where everyone's worrying if they're going to earn $1.50, $1.60, $1.70. I could care less about that.
Yeah, it's typical tree versus the forest. And
exactly.
You know, for those of you who don't know, in our morning meetings, we just need somebody like Brian to give us the meat. I mean, that is the call, okay? Sales are going from $1.5 billion to $4 billion to $5 billion. The margin expansion can double, and you have a stock where people are staring at the tree of earnings when it could be $8 a share. Now, how many people were focused more on what they said going into the Goldman conference on the same-store sales number, what the expectations were, that really short-term gain?
I think a pretty fair number of people were. I mean, you had a whisper that they were going to do something of around 29%. They only did 26. Now, granted, that's still an incredible number.
They only did 26.
Right. Everyone else out there in retail is putting up, like, 2 at best.
So they just beat JCPenney's comps by a little bit.
Yeah, just a little bit. But there are a couple of things I think people aren't really too focused on here that they should. Everyone gets this whole point about, yeah, they're going to add a bunch of square footage over the next 5 years. Like, that's not a big deal. What people don't understand is that they're also going to add about a dozen new businesses that they didn't historically own. This, everything from apparel. I know that sounds scary to a lot of people who think of Restoration Hardware. But they got an art business. They're going to start to do just about everything you'd find in like a Bed Bath & Beyond, a Williams-Sonoma. I mean, all of these things out there, that is where they're going.
So you either believe in Friedman, the executive running the show, in his vision here to sell a lot of stuff under this lifestyle brand, or you don't.
That's right.
Yeah. And that's, I guess, when you look at a growth stock, we wrestle with that a lot. All of our analysts wrestle with that a lot. Are we getting too in love with this story? Do we believe a management team that can't execute? If you think about that, Brian, and you think about the failures, I mean, this stock went into La Toilette a couple times. I mean, what have they learned? Why is it different this time for this company?
Because when it failed last time, all they did was like sell bunk beds. There's a lot. I mean, you saw, a big U.S. furniture company like 3 days ago who went Chapter 11 over the course of 6 months. It was horrible. I mean, it's just a bad business, right? You have to find a way to bridge the gap between your baby boomers and guys like us and our kids' generation as well. And that's exactly what they're doing.
That's interesting, because that's really a sweet spot right now. You got birth rates accelerating, household formation accelerating. It's really in the sweet spot of macro consumer spending trends in the country.
Right.
If you take that and just kind of like in one number, square footage growth, and you said, what is the Moneyball stat for this company? What is that number?
It's square footage going from 750,000 square feet right now up to 1.95 million.
Really?
Over the next 5 years.
So when you say, I could see people debating us saying, hey, the company sales are going to triple. I mean, come on, guys. But basically, the sales will double by basically doubling the square footage growth.
Yeah, and also mind you that change in square footage is going to happen by only adding a total of your store count going from 70 to 80.
Wow.
So
and that's really the most compelling part to me.
That's pretty
about this
huge.
Story. And that's really what we're looking for. We're looking for U.S. growth stories that have, a real U.S. growth story is the store base that goes from 60 to 70 to 80. we're not talking about an old store base. We're not talking about something that people completely understand. So again, when we think about growth stocks, we want to find those kinds of stocks that people don't understand, and this really fits the profile. Again, from a macro perspective, we don't mind buying growth if we can find it. We don't mind high short interest. We don't mind high beta, and we certainly don't mind buying stocks when they're on sale. And anytime this one approaches our trend line, which is right around $65 a share, Brian wants you to buy it, I want you to buy it. And if you don't want to buy it, if you want to whine about it, you can also follow us on Twitter and give us some feedback, because that's really important to us too. At Keith McCullough is obviously my Hedgeye handle, and with Brian, he's a prolific tweeter. He could be found at Hedgeye Retail as well. We'll look forward to hearing from you. Thanks for tuning in.